are major changes coming to Iraq's economy in 2025? And how could these reforms impact the Iraqi dinar? Your investment in it? In today's video, we're diving deep into Iraq's 2025 economic reform plan. What's changing? And most importantly, what it all means for dinar investors. Welcome back to Dinar Current, the go-to place for Iraqi dinar updates, global currency insights, and smart investing tips. Don't forget to like, subscribe, and hit the bell so you never miss an update on the dinar and Middle Eastern markets. Let's begin by understanding the core of Iraq's 2025 economic reform plan. In early 2025, the Iraqi government, led by Prime Minister Mohammed Shia al, rolled out a multi-phase national economic strategy aimed at diversifying revenue, modernizing infrastructure, and stabilizing the Iraqi dinar. Here are some key highlights. Shifting from oil dependence to a more diversified economy, including agriculture, manufacturing, and tourism. Overhauling the banking and financial system, promoting digital banking and financial transparency. Strengthening anti-corruption laws to reduce capital flight and black market currency exchange. Partnering with the IMF and World Bank for debt, restructuring, and investor protection. Implementing tax reforms and boosting foreign direct investment incentives. These reforms aren't just policy, many are already in motion. With funding approved in Iraq's 2025 federal budget, now, the big question, what do these reforms mean for the value and stability of the Iraqi dinar? That stability means less currency, manipulation, and better long-term confidence in the dinar. There are three key ways the reform plan can impact dinar investors. While not a full-blown RV or revaluation overnight, we could see a slow, steady increase in dinar value over time. 1. Greater currency stability. That means greater liquidity and ease of trading, which benefits long-term holders. By stabilizing the budget and increasing non-oil revenues, Iraq may reduce its reliance on daily oil price swings. 2. Potential for controlled appreciation. Iraq's central bank has indicated it may gradually adjust the dinar exchange rate to reflect real market value, especially as reserves rise and inflation falls. As of mid-2025, Iraq is exporting over 3.4 million barrels per day, with increased sales to India and China. Higher oil revenue means more foreign currency reserves, boosting the dinar's backing. 3. International integration. The reforms are designed to make the dinar more compliant with global currency systems, possibly opening doors to Forex platforms in the future. That could lead to currency reform benchmarks, eventually paving the way for a more flexible, market-driven exchange rate. The IMF has praised the country's progress, which could mean credit rating upgrades in the near future, attracting more institutional investors. But let's not ignore the big players in this story: oil exports, sovereign debt, and Iraq's relations with global financial institutions. Oil exports remain strong, despite diversification. Oil is still Iraq's main export. Debt and restructuring. Iraq has successfully negotiated new payment terms on foreign debt and reduced its budget deficit. IMF and World Bank involvement. Ongoing cooperation with the IMF ensures that Iraq sticks to international fiscal standards. While there's a lot of upside, there are risks and challenges every dinar investor should keep in mind. Political instability. Iraq's internal politics remain fragile. Policy changes can be delayed or reversed depending on shifts in government. Consider a mix of currencies, commodities, and stocks for broader financial stability. But it's also a reminder that currency investment requires patience, knowledge, and timing. If these reforms succeed, the dinar could indeed become one of the most intriguing currency stories of the decade. Black market influence. Unofficial exchange rates still exist in many parts of the country, often deviating from the central bank's rate. This weakens official efforts to stabilize the currency. And comment below, what are your thoughts on Iraq's future and the dinar's potential? Security and regional tensions. Any escalation in regional conflict, especially involving Iran or Syria, could disrupt reforms and economic progress. So, while reforms are promising, it's important to remain cautiously optimistic and diversify your risk. So, what's the strategy for dinar holders in 2025? 1. Stay informed. Keep up with Iraq's economic news, budget announcements, and IMF updates. Subscribe to reliable sources like your channel name. 2. Be realistic. Avoid falling for hype or RV scams, promising overnight riches. The smart investor knows this is a long-term play. 3. Know your exit plan. If a revaluation happens or even a gradual appreciation, aware and how to exchange legally, and understand the tax implications in your country. 4. Diversify your holdings. Don't put everything into one basket. Iraq's 2025 economic reform plan is ambitious, smart, and full of potential. If you found this video helpful, give it a like, share it with other investors. Subscribe for more weekly updates, rate alerts, and economic insights from the Middle East and beyond. Thanks for watching, and I'll see you in the next one.